Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1302A, and today's date is June 9th, 2017, and the title of the episode is, We Are Now at the Tipping Point. The Economic Contraction Picks Up Speed. Let's get into the economic collapse financial news. Now, what we are seeing the central bank, the deep state, they are losing the narrative. And you can see from the testimony with Comey, things are starting to go south. And what is happening right now, we're starting to see the economy contract even more. I mean, this is really speeding up at this point. And we can see out in the UK, retail sales are down. We can see the housing bubble in Canada with also Home Capital Group, where deposits have been leaving that financial institution. We see Banco Popular. They did a bail-in there. We know there's a lot of other banks that are in trouble. And we know that these stress tests that they've been using, they are completely fake, phony, and false. This was to convince us that everything was great. Listen, we're doing these stress tests and everything is fine. I mean, think about what they did after the 30s. They went back and they said, okay, listen, we'll add insurance onto this. We'll guarantee your deposits within the banks. And this is what brought trust back to the banks. 2008, they raised the limit of the FDIC guarantee to gain the trust. And they also said, we will then stress test. Now we're coming up to the point where the banks at this point, they're completely insolvent, and everything that they've been trying to do to convince us that their system is strong, well, it's all starting to fall apart right in front of our eyes. And I think the next time as we move forward, they're going to run out of guarantees. And this is when the big one hits. Now, when we look around the world, we can see that things are rapidly deteriorating very, very quickly. In Mexico, we see their industrial production. That has crashed by 4.4% in April. This is the biggest drop since October 2009. And manufacturing, well, that dropped by 1.7%. Now, this is the third month-on-month drop in a row, and it's the biggest month-on-month drop since November of 2015. Now, this is somewhat unprecedented and a sudden downshift of industrial production and manufacturing in Mexico. And if we look here in the United States, we see that retailers, they are in trouble. And we can see the corporate media is picking up on this now. Like I said, they're going to start to come out with stories telling you how bad the economy is doing. This is coming out of Bloomberg now, where they're saying that malls, if they didn't have enough problems before, they have one additional problem. Because what is happening is retailers, they're looking to slash the duration of their leases in strip malls and malls. Now, we know there's been a lot of bankruptcies, and there's a lot more coming. We know thousands of stores have closed. Actually, Garrick Brown, Vice President of American Retail Research, he's saying there's going to be between 9,000 and 10,000 stores that will close in this year. This is far above what UBS has predicted. Now, to take this one step further, Cushman and Wakefield, from their figures, they're predicting that next year there's going to be 13,000 store closures. Now, to further complicate this, before, retailers used to lease spaces between 5 and 10 years. Now they want to lease space between 1 and 2 years. And again, because the reason they're doing this is because they realize that they don't know if they're going to make it, which means their books must look really, really bad if they're looking to only take out a 1 to 2 year lease. Now, we can see that according to Cushman and Wakefield, there's going to be about 300 to 1,150 U.S. malls that will be shutting down in the next 5 years. And we can see that I'm going to say there's going to be probably double this, because at the rate we're going right now and what we see coming up, there's going to be a lot of malls closing. Because think about it, if they're taking these shorter lease terms, it means that they can get out of these leases, they don't have to pay that much, and it shows us that they're very worried about their bottom line, which means a lot of these stores are going to completely go under. And we know why this is happening, because a lot of individuals, they don't have jobs. Now, yesterday we reported on how the individual person, the consumers, well, they haven't been buying autos, they haven't been taking out student loans lately, they have been using their credit cards lately, and we're starting to figure out why, because what we're seeing is that the latest data from the Experian Bank Card Default Index is that March of 2017, the default rate on U.S. credit cards had jumped to 3.31%, an increase of 13% from a year ago. This is the highest default rate since 2013. Now, according to Moody's, the size of the jump was surprising in light of the ongoing strength of the U.S. employment market. I mean, is this laughable? Because we all know, because we've been following it, that these numbers are fake. But it's very strange how these rating agencies and all these economists are coming out saying, yeah, we can't explain this. It makes no sense. How could this be? Everyone has a job. Everyone doesn't have a job. These numbers are completely fake. The unemployment rate right now is around 23%. The problem is that all those people who are unemployed, it is hidden behind food stamps, by having money being handed out to individuals, by keeping everyone in the dark. You don't see the bread lines, the soup lines like you did in the 30s. So people don't see it, they don't think it's really happening, and they believe the statistical number. And what we're seeing is a lot of people who had the full-time, part-time jobs, they're working 1, 2, 3 part-time jobs. And a lot of people, they've just given up. Or have they? Well, according to the government, they've given up. But they haven't. They're still looking. There's just no jobs out there. And it's becoming very clear that the U.S. consumer, which is responsible for 70% of the U.S. economic growth, well, the U.S. consumer has finally rolled over, and things aren't going well. Now, Boeing, the U.S. largest exporter by dollar value, well, it looks like their company's not doing well. In 2016, net orders dropped by 13% from 2015 and 53% from 2014. Just 668 planes, the lowest level since 2010, were ordered. Through June 6, 2017, Boeing has just 208 net orders. The company right now is trying to cut costs. They are laying off individuals. Its payroll has shriveled by around 30,000 workers over the past 5 years, and it looks like they're going to be moving some of their work to China and other locations overseas. And we can see right now the economy is contracting. It is reeling. It is getting worse. Actually, U.S. companies that depend on consumers' discretionary income, they are at their weakest since Lehman Brothers. And we know what happened during that period of time. Now, when we look at different economic sectors, we see things, and there are signals here, and they're indicating to us that we are entering a recession. Now, when we look at wholesale inventory, we can see this is one of those signals. And there was a big drop in automotive inventories and sales and farm products. April's final wholesale inventories data tumbled by 0.5% month on month. And it has not been a bigger drop since May of 2013. This is considerably worse than the preliminary print. Year-on-year growth in both wholesale inventories and sales, well, they are starting to roll over. And all in all, this signals that the second quarter GDP could be in for a big downside recalculation. And we know that Atlanta Fed has the second quarter GDP at 4%. The New York Fed now forecast is a little bit lower than that. But we can see that these are completely fake numbers. I mean, look what is happening right now in the economy. Everything is contracting all at once. All these numbers that are out there, they are a complete illusion. Think back to 2008, when everyone said the subprime securities, they were all AAA rating. They were all AAA rated. What happened? That was a lie. They were not truly AAA rated. They were garbage. But everyone believed it because this is what you were being told. except for a few individuals that decided to look into it. Of course, people laughed at them. They made jokes about them because they wanted to short the market. And actually, who was laughing at the end? Well, they were, because they made billions and billions of dollars off of this because they looked into it. They didn't believe what people were saying. And this is what we've been doing. We've been looking into this, and we can see that this makes no sense whatsoever. And they're having a very difficult time explaining what is happening. Now, next week, June 13th and 14th, the Fed is going to have a meeting right now. We've been seeing a lot of weak data come out. Retail's closing, housing's a disaster, GDP, disaster. I mean, this is a manipulated number. Unemployment, manipulated number. But the Fed is going to look at this and they're going to decide, should we raise rates? Should we lower rates? And basically, I wouldn't be surprised if they raise rates once again, because I don't think they're looking at any of this data. They're looking at what they want to look at, and they're doing this on purpose. They want to bring down the economy. Yes, they can click a mouse and bring it down, but that wouldn't look natural. What they need to do is, again, they need to make the collapse look like it was a natural collapse. Now think about it. The central banks, they own a lot of stock, a lot of corporations. They could start selling that. They raise the interest rates, which triggers other economic sectors to go haywire, where the economy looks like it's naturally coming down. Now remember, Trump, his organization, and the central bank, they're all trying to get the narrative of when the system comes down, because if they hold the narrative, they hold all the cards. And this is the big fight right now. Now, Paul Krugman is out there right now saying, if you think the United States is a disaster now, just wait. Now, of course, he's talking about Trump and how everything is going right now, because basically what he's seeing is everything the deep state, the central bankers have been doing all this time, it's all unraveling. And this is why he's calling it a disaster. It's a disaster for the central bank. It's a disaster for the deep state. And he realizes once this is all unwound and everything is out of the way and the economy collapses, yes, it will be a disaster. And he's hoping, and those in the deep state, those in the central bank, they're hoping that they can control the narrative to say, see what Trump has done. Now, Trump, on the other hand, he is looking to basically control the narrative and get everything in place for this collapse scenario. Now, I'm sure he has plans, and I'm sure that there's plans behind plans and strategies that he is using. Now, one thing he needs to do is get Glass-Steagall back into place. Now, this was removed back in 1999. It was put into place after the 30s. So this way, banks couldn't speculate with depositors' money. It separated it. But now, since they removed the Glass-Steagall back in 1999, it allowed banks to do this. And this is why we had this big disaster happen in 2008. I mean, it's one of the reasons. Now, we can see that he needs to put this back into place, and we can see he's already moving in that direction. And he's doing a lot of things that the central bankers, they don't want him to do. They like the way it is because all the wealth flows into their pockets. And they steal the wealth from the poor, the middle class, the rest of the world, and they bring it all to them. This is what they've been doing all this time. Now, what Trump is doing, he is trying to set everything up for the transition period and for after the collapse occurs. Now, we can see he's been making deals with corporations to try to bring them back, bring back employees. This is not for right now because it's completely impossible in this economy. He's also reviewing the lands, looking at the natural resources. Of course, this is the land that they put aside for collateral on all the debt that we hold. He's opening up the drilling once again because once we come off the petrodollar system, just like we were going on the petrodollar system, oil is going to be very difficult to get from the Middle East. Things are going to be haywire for a little while. And this is why he's looking to have the U.S. independent of that. He's also looking to sell the reserves in 2018 to bring in currency into the country to keep it operational. There's a lot of things happening all at once. And we can see right now, this is all in preparation for the collapse. Now, I do believe he's going to try to make this a soft landing, but I don't think this is going to work because I think the economy at this time is too far gone, and he was going to make the impact really soft as we move into this transition period. But it seems to me right now that this is going to be a hard landing, a hard transition. Now, I think he's still under the impression to bring this down slowly but surely and make it a lot easier for the people. But from everything I'm looking at, the entire economy, well, it is contracting very, very quickly. It's sliding into a depression very, very quickly. And I think just like the 30s, just like in 08, I think it's going to hit hard. And there's going to be no way out of this, and it's not going to be easy for anyone. And this is why everyone needs to be prepared and ready, and you need to get everything in order. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.